We're going to get a test of the Trump economy today with the release of third quarter gross domestic product, GDP, and, of course, the Federal Reserve's decision on interest rates. It is a big day. James Russo, chief investment strategist at Altius Capital Management, is here. And really, I think the Fed decision is going to be something else today. We're expecting a quarter point.
Yeah,
incredible.
Yeah, we definitely need a quarter point from the Fed. And it was interesting to hear Biden's comments about the economy that Trump inherited. And certainly, we've had 2% GDP that's been very tepid over the past decade, really, now. And I think that the shot in the arm we got from the tax reform was wonderful. Tariffs have been a bit of a dampener on it. And the Fed last year, which I was a pretty big critic of, as they were raising rates at a time when we had low inflation and a time when we really didn't need to be raising rates, they're now correcting that, and they need to correct it with another quarter point.
Interesting. So you're like everybody else is looking for that quarter point today from the Fed. What about for GDP? The estimate is 1.6%. We got 2% in the second quarter, so it's not 3%. The estimate is 1.6%. The trade war, maybe? You think?
It is. It's really hurting consumer confidence and, more importantly, business confidence. And so you're not getting that business spending. So businesses are kind of sitting on their hands, really deciding what to do. And I don't think we're going to see anything really positive coming out of the trade and the tariff war anytime soon. I think you're going to see Trump eventually is going to have to declare a truce on this as we head into the political environment. He wants to get reelected, obviously. So with a truce, at least we'll be in a better position for the economy to at least stabilize.
Well, and also we're going to be getting the jobs report coming out, the monthly jobs report. And, with unemployment at a 50-year low, companies are right now in the season of hiring for the holidays. And we're seeing companies announce they're going to be adding 10, 20, 50,000 jobs. They're going to have a hard time filling those jobs, which I think is fascinating.
They are. And the consumer's been incredibly resilient. And I think you're going to see a wonderful Christmas. And I think that the job hiring will be there. And I think the economy is doing well. We're seeing that now in the earnings season. It's been very positive for most companies.
All right. Let's talk about these comments. Wall Street more and more, we're getting more and more commentary from hedge fund, from billionaires, from CEOs of the banks that are talking about the 2020 election. And they're worried that the stock market could really take a big hit, especially if Elizabeth Warren or Bernie Sanders were to take over the White House. In particular, Steve Cohen, a $15 billion hedge fund he's managing, he says GDP would hit 1% if it was Elizabeth Warren, and the S&P would lose 25% of its value if Elizabeth Warren was elected.
We heard a lot of the same when Trump was elected, too. And America's been so resilient in both conservative and more liberal presidencies. So businesses are incredibly resilient in their ability to earn money, both in positive regulatory environments and those that are more challenging. And I think if you have an Elizabeth Warren election, you'll likely have some continued gridlock, and a lot of the things that she'll want to get through really won't happen. And they'll move, businesses will move to where the ball is, to where they need to continue to be profitable.
So you're not as worried as Steve Cohen is, who says he says the apocalypse is
coming. But I'm not a
coming.
billionaire, though, so maybe, I don't know.
Sure, he probably has a lot more at stake than the rest of us. It's true. James, thank you very much. Appreciate you being here this morning.